Hey everyone, it is Julie here with TipRanks. Today we're taking a look at two healthcare stocks that score both a strong buy and a perfect 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks in the healthcare industry. Now these companies both score a 10 out of 10 on the TipRanks Smart Score. That looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of this, they also have a strong buy consensus from Wall Street analysts, but also a strong buy rating on our technical analysis tool. So let me show you where I came across these stocks today. Under Tools, I headed over to the Technical Analysis Screener. This looks at a few factors like the Moving Averages score, Technical Analysis, and Oscillator score. With this, we were looking for a strong buy rating both on this Technical Analysis and Analyst Consensus, and I also wanted a Smart Score of 10. That gave us our list down below, and then we narrowed it down from there. So in today's video, we're going to take a look at these two companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. You can also download our TipRanks mobile app to check out these stocks yourself by following the links in the description down below. Now let's get right into our two strong buy stocks. First up is a company called Lantheus. They trade under the ticker LNTH, currently priced at $80.45. Now, they did take a dip at the start of the year and are down 6.6%, but have been climbing back recently, up 3% in the last 6 months and gaining 34% in the last 3 months. Their 10 out of 10 on the TipRanks Smart Score does come with increased hedge fund activity, positive crowd wisdom, and very bullish new sentiment. Lantheus is a radiopharmaceutical firm, and the diagnostic imaging company already has 2 pharmaceutical products available on the market that have significant growth potential. Lantheus is known for their Definity, which is an ultrasound contrast agent used to enhance echocardiograms, and PYLARIFY, which is a prostate cancer diagnostic imaging agent. Definity is the most utilized enhancing agent of its kind among U.S. patients, and with 2 decades of history among adult patients, they just received FDA approval for pediatric patients in March of this year. Lantheus just announced at the start of this month that their new AI-enabled software, A-Promise, is now available. A-Promise is a deep learning, AI-enabled, FDA-cleared medical device software that provides quantitative total disease burden on PSMA, PET, and CT images, including those obtained using PYLARIFY. Their first quarter earnings report came out at the start of May. The company did see an earnings beat, plus some double-digit revenue growth. Q1 earnings per share came in at $1.69, beating the estimates of $1.54, while revenue grew 23% year-over-year to $370 million. With this, the company also increased their full-year 2024 net revenue and earnings guidance. We heard from one analyst from JonesTrading following that Q1 earnings report who reiterated their buy rating. The analyst noted the company's robust financial performance and promising growth prospects, saying that in the first quarter, the company outperformed expectations, and this achievement is attributed to the continued market leadership of their products PYLARIFY and Definity, with PYLARIFY on track to become a blockbuster with over $1 billion in revenue. The optimism surrounding Lantheus is further bolstered by their pipeline of clinical and regulatory developments expected to unfold over the next 6 to 12 months. Lantheus does currently score a strong buy both on the technical analysis tool and amongst Wall Street analysts. Scoring a buy rating on both the technical analysis and moving average consensus, that does give us a strong buy overall rating, and with 6 Wall Street analysts weighing in, we do have a unanimous strong buy. The average price target of nearly $105 would imply an upside potential of over 30%. Looking at our recent ratings down below, on the low end we do have this $96 price target from Truist with an upside of 19%, while our high-end price target does come from JonesTrading with an upside of 59%. And for our second strong buy healthcare company, we have Intra-Cellular Therapies. They trade under the ticker ITCI, currently priced at about $69 per share. Overall, in the past year, they're up 5.9% and are up about the same in the last 3 months at 5.6%. They score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, insider transactions on the rise, very positive crowd wisdom, and those strong technicals. Intra-Cellular Therapies is a biopharmaceutical company that develops treatments for complex psychiatric and neurological diseases using an intracellular approach. The company's approach is based on the Nobel Prize-winning research of Dr. Paul Greengard, which revealed how therapies affect the inner workings of cells in the body. They work to deliver innovative treatments to improve the lives of individuals with neuropsychiatric, neurological, and other disorders. Their pipeline includes small molecule drugs for treating conditions such as major depressive disorder and bipolar depression, agitation and psychosis in Alzheimer's patients, and schizophrenia. They shared their Q1 earnings report on May 7th. Not only did they see big year-over-year jumps in sales, the company also reported a loss per share that was half of what was expected. For their Q1, they reported a loss per share of 16 cents, which was much narrower than the 32 cents analysts had anticipated. Total revenues came in at $144.9 million, which was about a 53% year-over-year increase. With that, the company also reiterated their 2024 net product sales guidance between $645 to $675 million, and they also announced robust positive Phase 3 results from their Study 501, which was evaluating a drug as an adjunctive therapy to antidepressants in patients with major depressive disorder. Just yesterday, we had an analyst at JP Morgan who reaffirmed their rating on the stock. They noted strong potential for their leading drug, Caplyta, and she's confident in the drug's performance in the adjunctive MDD market, which is underscored by robust sales in their current indications and encouraging results from that Study 501. Moreover, the management team's belief in Caplyta's consistent clinical track record in treating mood disorders adds to the conviction that the upcoming readouts will be favorable. With 13 current analyst ratings, the Intra-Cellular Therapies stock does come in as a strong buy. And of course, also scores some buy ratings on the technical analysis side as well. Those 13 analyst ratings come in with 12 buys and just one hold, with an average price target of over $94 for an upside potential of 38%. You can see our most recent ratings here, one from JP Morgan coming in at 14%. Our low-end price target is this hold from Goldman Sachs with an upside potential of 11.4%, and our high-end price target comes from Cantor Fitzgerald at $120, which would imply an upside of over 75%. So that is a quick look at two healthcare stocks that both score a strong buy and a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these two companies in the comments down below. I always love hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just showing what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.